Hey guys, and welcome to the Working Money channel. Mike Manfield here on Twitter posting this. Okay guys, this coming from Capgemini and their World Payments Report. This report predicts that the non-cash transaction volumes across the globe will reach $1.3 trillion by 2023 and $2.3 trillion by 2027. So we know Capgemini has a connection to Ripple and Swift, the intermediary there that could in fact connect the two companies together. I recently did a video on that, which I will link up here in the top right hand corner. Guys, their world report just came out, non-cash transactions to reach $1.3 trillion. So this year's report shifts its focus to explore the significant opportunities for banks and payment service providers to support corporate treasuries and commercial enterprises. This week, Capgemini released their highly anticipated payments provider report, which expanded its traditional focus on retail payments to cover a broader spectrum of opportunities when it comes to cash management. The report predicted that the non-cash transaction volume across the globe will reach 1.3 trillion by 2023, which is, we're almost at the end of 2023 now, and 2.3 trillion by 2027. Capgemini finds that 56% of total global payment value is attributable to commercial payments, outpacing the spend on retail payments. In fact, over 1 in 2 respondents agreed that commercial payments offer better profit potential than retail payments. Cash management remains a constant and important challenge for corporations facing macroeconomic headwinds and uncertain growth, and it is becoming increasingly important for banks to tighten their oversight and better understand their overall banking revenue. So a very, very interesting observation here. Yesterday, if you guys didn't catch the video I did, we were talking a little bit about Ripple payments, or Ripple when it comes to their business vertical for payments. You know, this thing that they've been working on for decades, well, about a decade and a half, the new liquidity hub rails that they've recently announced, and how the model is shifting, perhaps suggesting that they have perfected the payment space and are moving on to bigger and better things. So XRP poised for that utility, ready to be released from the gate. Note down here that Capgemini notices the financial strategic initiatives for digitalization. So this a big point here. While cash was historically easily accessible for large enterprises, surging interest rates have led to an increase in the cost of debt, and firms are now refinancing and trying to manage growing interest expenses. Highlighting this challenge, the report also found that a large number of respondents stated that 90% of their budget is spent on business as usual processes, preventing them to invest significantly into innovation and transformation. So they're looking for new solutions, guys, and digitized payments. This obviously is going to be a huge market. Think of trade finance alone. This one coming from Cyprus Domenicor here on Twitter. He confirmed a $20 million volume flow in trade finance, and that is just trade finance alone. Okay, so think of this, guys. All the money, and it's only going to grow. Listen to this.
I think working capital resonates a lot more with me, certainly as running an organization too. You know, it is all about working capital, isn't it? Can you just tell us a little bit about the numbers? Because you've quoted to me before some pretty large numbers. The ICC says there is a trade finance gap of 1.7 trillion worldwide, which is a pretty large number anyway, but you quoted much bigger figures on working capital. Could you just explain what those figures are?
It's quite difficult to figure out how you want to draw the boundaries around the working capital market. But if you look at it sort of nuts to bolts for everything from SME to very large corporates and all product types, the amount of capital deployed by the financial sector to fund businesses is somewhere in the region of 20 trillion USD. And the gap in terms of the amount of demand that's unmet is somewhere between 3 and 5 trillion USD currently. And the expectations is that demand is going to continue to grow. So by 2030, it's expected that there'll be need for another 10 trillion USD of working capital sort of financing, credit, or other solutions like early pay, for example, in order to help businesses to optimize growth and employment.
So estimated at $20 trillion today, but is only going to grow by another 10 trillion by the year 2030. And guys, that's 7 years away, not even six plus years away. So we're almost in 2024. Geez, wow, how the time flies. Trade finance alone, $20 trillion. Now, for those of you guys who might be kind of confused by this topic, trade finance represents the financial instruments and products that are used by companies to facilitate international trade and commerce. So remember yesterday, digital payments, Ripple and their liquidity hub, and expanding that from the US to Brazil and Australia. Trade finance makes it possible and easier for importers and exporters to transact business through trade. Trade finance is an umbrella term, meaning it covers many financial products that banks and companies utilize to make trade transactions feasible. You know, when we think of trade finance, we got to think of all those different types of transactions that's going to cover these costs that these businesses have, and they're just going to mount. So how trade finance works, for example, the function of trade finance is to introduce a third party to transactions to remove the payment risk and the supply risk. Okay, so think about digital payments, think about the new liquidity hub, and think about that expansion. Trade finance provides the exporter with receivables or payments according to the agreement, while the importer might be extended credit to fulfill the trade order. The parties involved in trade finance are numerous and can include banks, trade finance companies, importers, exporters, insurers, and export credit agencies and service providers. Trade financing is different than conventional financing or credit insurance. General financing is used to manage solvency or liquidity, but trade financing might not necessarily indicate a buyer's lack of funds or liquidity. Instead, trade financing may be used to protect against international trade's unique inherent risks, such as currency fluctuations, political instability, issues of non-payment, or the credit worthiness of one of those parties involved. So again, just going back to yesterday's video, and I implore you to watch that video if you guys want to get a better grasp on where I see Ripple's position in this. Currency fluctuations, well, if you can essentially make these digital payments through a cryptocurrency like XRP, you can solve for that problem because these payments are going to go through, boom, instantly, 3 to 4 seconds for settlement. Political instability, well, you have that country agnostic cryptocurrency. The issue of non-payment is definitely not going to be an option since you know the money will be in the account right away, 3 to 4 seconds. Credit worthiness of one of the parties involved. So, that is, that'll just speak to the individual parties. But, it all makes sense. It really does make sense. If Ripple wants to support payments globally, which they do, they've realized the cross-border segment is just one piece of the pie. They started there. They did it very, very well. I think they succeeded, and I think they're not really focusing on that anymore. They are now moving to bigger fish, and this is where we're going to see all the money, all the volume flow, okay? So below are a few financial instruments used in trade finance, and then it gives some examples here. I will leave this in the description of the video for you guys if you're interested to read further. I just wanted to give you guys some context there. $20 trillion, and by 2030, it'll be $30 trillion estimated. Cyprus Dominion Core here also brought this up. So another very, very interesting piece to this puzzle. The fact that digital assets, the future of payments, is happening. And guys, it's happening right before our eyes, and they're talking about it, okay? This has to do with OPTIC 2030, Operations, Post-Trade, Technology, and Innovation Conference, okay? About this event. OPTIC is returning for a second year. The AFME, Annual Operations, Post-Trade, Technology, and Innovation Conference, brings together the industry's leading voices to discuss the role of technology in developing capital markets in Europe, with particular focus on the world of operations and post-trade. So they're also looking at trading, finance, all that fun stuff. It's a 2-day event with keynote addresses, blah, blah, blah. Delegates will hear from practitioners, technologists, and policymakers on the most important innovations happening here and now. And so it just giving you an outline basically of this. I wanted to show you guys this though, brilliant here. Okay, look at all these companies and look at how many of them are Ripple enabled already. Bank of America, Bank of Nova Scotia in Canada, Banco Santander, BBVA, BNP Paribas. Look who else is going to be attending, guys. BlackRock. You cannot say that this is not going to be huge. BNY Mellon, which I talked about just the other day. I will link that video up here in the top right-hand corner for you guys. Who else is going to be here? Citi going to be making an appearance. Deutsche Bank, Debevoise and Plimpton, which is the law firm that is representing Ripple in the SEC lawsuit. Goldman Sachs is going to be there. ING Bank, another Ripple partner. I mean, I'm just going through this just quickly, guys, but I will link this all in the description of the video for you. We've got MUFG, Nomura, 2 Japanese Ripple partners, Rabobank, another Ripple partner here. RBC is a Ripple partner in Canada. And look who else is going to be here, guys. Rothschild and Company. So we got BlackRock, Rothschild and Company, and many of these other Ripple partners, Societe Generale. All these guys are going to be making an appearance at this event. So this is going to be pretty big, I have a feeling. And even if we go down here, we scroll down through the agenda, and we look at what is on Wednesday, October the 18th, what's on the docket there. The evolving European regulatory landscape for digital assets. Okay, panelists reflect on the latest developments in MiCA, and the EU looks to position itself as a global leader in regulation of digital assets. With the DLT pilot regime now in operation, what has the industry uptake been, and what lessons have been learned? So they're talking about these sandbox, these pilot projects, sunsetting and realizing, okay, now we've got to, take our notes, look at them, analyze them, and how are we going to make these moves next? How does the proposed UK FMI sandbox stack in comparison? So just, a few things here that they're looking at. Digital assets is a big one, guys. And the head of the BIS Innovation Hub, Cecilia Skingsley, she is the one who is going to be speaking on this, okay? Now we have institutional adoption of crypto assets. This is where it gets really meaty. Institutional adoption, guys. Trade finance alone, $20 trillion. And here they're talking about institutional adoption of crypto assets. Have recent market events slowed down institutional interest in crypto? Will stricter and clearer regulations facilitate greater adoption? So I think they know the answers to all these questions. What type of crypto assets have the most potential for wider adoption? What types of crypto assets? Well, if we're talking about money, we certainly aren't talking about Pepe coin. I think even just by, doing your research on YouTube every day, we can probably come to the same conclusion that these bankers are paying thousands of euros to listen to somebody talk about. I think, guys, we've gotten into the right investment, and, this is only going to just get bigger and bigger. We recently just heard this, guys, from Deutsche Bank. They're offering crypto services. This coming from XRP Crypto Wolf here on Twitter. Germany's largest bank, Deutsche Bank, is set to offer crypto service to its clients. The $1.34 trillion banking giant teamed up with Taurus to be able to provide custody and other digital asset services for its customers. Now, Deutsche Bank did go on the record. I don't know if you guys remember this from back several years ago now. Well, this was from July of 2023. Ido Farina did notice this cash management paper by Deutsche Bank. And in 2017, what they said was this, okay, cash management, a game-changing proposition coming directly from Deutsche Bank, solving for liquidity. And they gave the example in 2017 of DLT-based global payment challenger Ripple, claiming that it's more than 100 financial institutions are RippleNet members and are already in production with its solutions. So they were doing that in 2017. Obviously, this is when Ripple already, when they were already kind of launching off with DLT technology and starting their partnerships with banks. For example, SEB has processed more than $1 billion in payments over RippleNet between Sweden and the US. Ripple experienced a banner year in 2017 in terms of customers going live, says Ashish Burla, and he predicts an even greater uptick this year. And so, they talk a little bit about the exchange partners that Ripple has as well for their XRapid solution at that time. So Ripple was definitely on Deutsche Bank's radar back then. Fast forward to today, guys, and now they're custodying crypto. So maybe a bit of a competition to Ripple's branch that provides crypto custody, i.e. Medico. But all these pieces of the puzzle ultimately are going to work together for real-world adoption and eventually huge use cases for those cryptocurrencies that are going to solve problems. So wanted to thank Cypress Domenicore and XRP Crypto Wolf just for posting that. I also happen to see this guys too from Ripple partner Finastra. They've just launched compliance as a service to help banks combat financial crime for instant payments. So, the security, that is also going to play a huge role in crypto adoption. I think, there's a lot of phishing scams out there. The other thing too that, us as retail holders have to be careful of is, the fact that we hold our cryptocurrency and we don't have a custody service provider that is insured. So, we've got to take it upon ourselves to hold our cryptocurrency. And this is why I keep mine personally in a cold wallet storage solution. I personally use the Ledger. I do have an affiliate link in the description if you guys want to use it. You don't have to use it. I know many of you guys already have a solution or a ledger or have purchased a ledger through me in the past, which I really do thank you guys. But back to security, okay, Finastra, they're a global provider in financial software applications and marketplaces. Today, they announced the launch of a new payment solution, Finastra Compliance as a Service on Microsoft Azure. The service includes FinCom's real-time AML, anti-money laundering transaction screening, and Theta Ray AI-powered transaction monitoring as a pre-integrated package solution with Finastra Payments to Go. The end-to-end solution based on technology proven at many of the world's leading financial institutions enables US and European banks to streamline and automate compliance processes to effectively deliver instant payments. The service will soon be integrated with Finastra's Global Pay Plus. So Ripple partner Finastra also working on security. That is one thing that I guess Ripple has outsourced to other companies, the security aspect of it. I don't see them them really getting into security, but maybe I could be wrong. I mean, many different verticals. This is a very ambitious company, but through, their partnership with Finastra, they've already found a solution for that. So Finastra Compliance as a Service helps banks take advantage of and comply with a range of instant payment infrastructures, including the FedNow service. So we know FedNow, also based on the Valente technologies, which is Ripple enabled, with real-time compliance screening by FinCom and real-time AI-powered transaction monitoring from ThetaRay. The service will allow financial institutions to accelerate business growth, increase risk coverage, and reduce operational costs. Here's a quote, guys. The introduction of any new payment rails brings new risks, and especially when that rail operates in real time. This coming from Mike Veig, Chief Product Officer of Payments at Finastra. He says, we are building on the success of Payments to Go for instant payments by providing accurate and efficient compliance capabilities at a reduced total cost of ownership. By pre-integrating FinCom and ThetaRay into our solutions, our customers will reduce the time and risks of launching instant payment services while benefiting from the new level of security, scalability, and flexibility. So there you guys go. Finastra getting into the security game or beefing up their systems with more security. Some too in the XRP community have taken a look at these opportunities for us XRP holders. I mean, we're not making money now. Some of us are too impatient to be waiting perhaps for a $60 XRP or maybe even just a $5 XRP. And so, this spec run is going to be one thing. XRP is going to rally with the rest of the market. I mean, the real world utility might take some time. It's not going to happen overnight. We're not going to see a, $200 XRP overnight, and probably not even in this bull run. I mean, it might happen, but, those higher prices are going to be commensurate with the utility. So some are suggesting that they're going to contribute their XRP to the AMM pools that were recently talked about here. David Schwartz did discuss this a little bit. This one coming from DJ Peter Vass here on Twitter. Ripple CTO suggests that the upcoming XRPL AMM could contribute to XRP buying pressure. So will we actually see more buying pressure when this AMM is launched? And guys, you know what that means. Supply and demand, more buying pressure obviously would mean a higher price for XRP. So David Schwartz did come out recently. He engaged in an insightful discussion on Twitter, highlighting how the upcoming XRPL automated market maker, or the AMM, could impact the price of XRP. Notably, a concerned XRP community member asked whether the launch of the AMM, where XRP holders will pool their assets, might lead to a significant drop in value. So here is the theory behind that. Francis Bovine Swift posted this. He said, David, when AMM goes live and a bunch of XRP holders start putting their XRP into pools, and since a lot of us only hold XRP and are dollar poor and only hold XRP, won't the price of XRP tank since the AMM will be selling a bunch of XRP to balance out the pools? So he is worried about, the price of XRP tanking. Of course, if, a lot of XRP holders decide to do this, then, the price of XRP will in effect go down. Well, David Schwartz did respond to this. He says it's true that if the AMM draws mainly from XRP holders and XRP holders alone, it will be a short-time net increase in selling pressure. Yes. So that theory remains true. However, he says, I doubt that will be significant and might even be outweighed by people going in the other direction. So David Schwartz is actually thinking, you know what, there's going to be enough buying pressure that this will be insignificant in the medium to long term. Short term, maybe. But by the medium to long term, guys, more utility, more demand. He could see demand going in the other direction, and guys, with demand means price. He suggested that this selling pressure might be offset by a wave of individuals buying. And so is it reasonable to imply that David Schwartz anticipates a substantial influx of buyers once the AMM goes live, thus bringing the price of XRP even higher? I mean, I certainly do think so. I don't think that that is off base at all. I guess the question really is, how long will that take? How long will the adoption take? And, how long will it realistically take for, people to accept this new technology and, want to adopt it right away? I know I never want to be the first one doing any of this tech stuff. I'm never one of those guys who buys the latest whatever iPhone or anything like that. I like to sit back. I like to wait. I like to see where it goes before I make a decision. So, maybe it'll take some time. Who knows? It could happen sooner than we think. The AMM looking to be released fairly soon. So David Schwartz feeling pretty confident that the buying pressure would outweigh the initial selling pressure. And we got to remember, guys, how many people in the XRP community are we talking about here? How many are really going to participate in the AMM? I know personally I'm going to keep my XRP safe on a cold wallet storage solution. I'm waiting for this spec market to rally, and I'm going to be selling. I'm going to be selling a portion of my XRP. My trading targets have changed this time around, and you guys can follow me. I know you know about this. $5 a month. I'm going to be posting my trades, not just XRP, not just Bitcoin, and the coins that I talk about on the show, but more coins too that I don't talk about at all on this show. I've identified certain coins that I think are going to be potentially high flyers in this coming bull run. So for only $5 a month, you can follow me, guys. And I purposely kept it fairly affordable so that you guys can follow me all the way to the end of the cycle. Patreon.com/workingmoneychannel. I think it's a pretty good deal. If you ask me, interesting too, that, even though Ripple did get clarity, or rather XRP got clarity in the lawsuit, that Gavin Michael from Bakkt is, here's what he said. It's not out of the question that Bakkt might relist XRP. This is what he said in an interview with CoinDesk. Listen to this.
As we then start to look at what happens at a federal level, I think the recent findings in the Ripple case are acting as a catalyst to be able to bring the right debate, an informed debate around these assets. We saw movement out of House Financial Services over the last couple of weeks with markups of the bills completed, although they have a long way to go before we see them get signed into law. So the discussions are happening. I think the challenge for us is the pace at which they're operating. And when we compare that then to what we see in jurisdictions where there is absolute clarity, the rules of the road are understood, it really changes the way in which you can operate and run the company.
Let's talk a little bit more about the Ripple case. It felt like when that partial win came out, there was a collective sigh of relief. Now we have the SEC appealing that. As the CEO of Bakkt, how are you watching the Ripple case? How does it actually have an effect anymore? It seems like we're going to have a lot of back and forth until we get any real clarity in that one.
Yeah, I think that's right, Jen. Obviously, we have taken moves through the course of the last several months around listing of different tokens to take them off the platform. We take a number of factors into account when we make those decisions, one of which is obviously the macro regulatory environment. And when we see things like the judgment and then the appeal, there are obviously things we take notice of, we follow because they're important inputs into the process. But right now we're sitting back and watching to see how this evolves.
I know we spoke a little bit about the back and forth in the Ripple case, but when that partial win was announced, was there any part of you that thought we're going to relist those tokens, or we should relist those tokens sometime soon?
I think it's fair to say we took a look.
Well, they took a look, but still no verdict if Bakkt will be, in fact, listing XRP, I guess, on their platform. Anyway, wanted to thank Wheezy for posting that. Guys, it's not stopping countries like Luxembourg from dropping XRP patents like hotcakes. This one coming from Utility FTW here on Twitter, guys. Ripple Luxembourg, and I didn't even know there was a Ripple Luxembourg. Check out all the patents that they have applied for, some of them granted, others not. Again, this is Ripple Luxembourg, a subsidiary of Ripple from San Francisco, California. And look at these ones, guys. We haven't had any really in 2023, but 2022 saw a huge influx of patents. Also 2021, things like transfer cost and lock timeouts as a resource transfer system, private networks and content requests in a resource transfer system, temporary consensus subnetworks in a distributed network for payment processing. And guys, this is just one country, a very small country, I gotta say, but Ripple Luxembourg has been knocking it out of the park. Tons of patents since 2018. So, if Ripple Luxembourg is, focusing on payments, and the Operations Post-Trade Technology and Innovation Conference is planning on educating the world on institutional adoption of crypto assets. Do you think it's wise now? I shouldn't say that. It's up to everyone to make their own decision. I'm personally not going to be participating in the AMM. It could increase XRP buying pressure though. But guys, it's going to be small potatoes compared to when that real world utility kicks in. And again, I'm taking this opportunity in the spec market to cash out because quite frankly, I'm going to be honest with you, I did not cash out enough in the last bull run. That's just my opinion, but I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.